And the fact that they have committed to releasing new cars gives us some confidence that they will most likely reach that 1.8 figure and continue to expand into the following year. We have some hope and faith that they can maintain that growth trajectory over the coming years, because we don't know how they'll look at the conclusion of this year and the beginning of next year. When they reported earnings, we were particularly interested in FSD, or full self-driving take rates. During the quarter, they drastically reduced its price. We believe in autonomy, so it will be crucial to observe how many individuals take advantage of their free 1-month trial and purchase the program this quarter. The short-term story revolves around that. The stats are finally beginning to reflect the growth they have been discussing for a while. That, in my opinion, is one of the main causes of the stock's increase yesterday and the subsequent pre-market move higher here. Have you seen how the price of Tesla's stock has changed recently? We're breaking down the causes of financial analysts' increasing optimism today. There is a lot to talk about because of Tesla's notable advancements in energy storage, its development of autonomous driving technologies, and its hints of new, more reasonably priced car models. We'll examine professional forecasts, such as analyst Garrett Nelson's noteworthy price target raise, and consider how these changes may affect Tesla's place in the market and prospects going forward. This episode will provide you a thorough understanding of the elements influencing Tesla's stock performance, regardless of whether you're an experienced investor, a tech enthusiast, or just wondering why the company keeps making news. For frequent updates and in-depth analysis on everything Tesla, don't forget to subscribe to Tesla Stock News. That being said, let's begin this video and dive right into the analysis. The much larger story was on the energy storage side, but everyone was preoccupied with the vehicle delivery numbers they released yesterday. In the second quarter, they recently announced 9,400 megawatt-hours of energy storage deployments. The record high they recorded in Q1 was more than doubled. I believe that the reason you saw that rise in the stock yesterday and then another move up now pre-market in the shares is because the growth they have been talking about for a long time is finally beginning to show up in the figures. He significantly changed the focus to longer-term market prospects in robotics, AI, autonomous driving, and energy storage. Since then, the stock has, in my opinion, seen a lot of upward momentum, and everyone's attention is focused on Robotaxi Day on August 8, which is far more significant than yesterday's release or the July 23 results release. The good news is that Musk has been talking about this mass market, affordable EV for years, and people have been waiting for it to be released. In fact, we believe they're ahead of the curve, and by the end of next year, we might see the first manufacturing. With significant changes in the perspectives of a number of prominent experts, interest in Tesla stock is increasing. Let's examine the viewpoints of 3 significant individuals: Keith Fitzgerald of Money Map Press, Dan Ives of Wedbush Securities, and George Gianarikas of Canaccord Genuity. Gianarikas predicts growth fueled by impending car launches and speculates that Tesla may have hit its lowest point. In the meantime, Fitzgerald and Ives have both emphasized Tesla as a greatly underappreciated participant in the AI industry. YouTube analyst Brian White also joins us to discuss his surprising enthusiasm for these advancements. As we've seen, analysts frequently modify their price targets in response to market movements, creating a loop of revisions that don't predict future occurrences, but rather reflect past ones. What then is causing Tesla's stock to continue to rise? Gianarikas and other analysts highlight the company's steady revenue and profitability growth over the past few years, which seems to have petered out in the first quarter. There is a positive prognosis for the stock's trajectory because new car releases are imminent. We'll now turn to Tim Higgins, a CNBC contributor and Wall Street Journal business columnist who deepens our conversation. Higgins points out the rise in delivery volume, as well as the possible difficulties posed by Chinese producers. The dynamics of supply and demand must interact for Tesla's stock to change in the future. Tesla is at a turning point as the electric vehicle (EV) market continues to change. Despite maintaining a solid presence, the company is currently facing increased competition, especially from Chinese manufacturers like BYD. With EV adoption in the US averaging between 4% and 5%, Tesla's growth is modest, while BYD is profiting from the strict EV regulations in its home market. Since Tesla is not constrained by the same low margins that BYD stockholders have been accustomed to accepting in exchange for rapid expansion, the company is anticipated to achieve considerable profit rises despite this slower growth. Turning now to Tesla's approach, it appears that the corporation has undergone a philosophical transformation. Perhaps as a result of a strategy realignment, rather than a shortage of funding, the planned building of new factories and the launch of new models have been postponed. This demonstrates the company's cautious stance in the face of a quickly shifting market and implies an emphasis on long-term significance rather than immediate expansion. At the same time, competition is getting more fierce on both sides of the market. At the lower end, Chinese companies appeal to buyers on a budget, while at the high end, Tesla confronts competition from upstarts like Lucid. Due to this rivalry, Tesla must strike a difficult balance between competing with more affordable products and preserving the attraction of its luxury brand. Another development is that there is still a lot of interest in the rumors that Tesla has a lot of potential in the robotaxi sector. George Giannarikis, an analyst, will talk on the importance of Tesla's full self-driving (FSD) capability, particularly in light of recent price cuts and marketing experiments. The adoption of this technology may serve as a key predictor of both Tesla's immediate and long-term success in the field of autonomous driving. Full self-driving (FSD) technology is crucial to the discussion about Tesla's future, especially in the field of autonomous vehicles. FSD serves as a crucial transitional step for those who are skeptical of the robotaxi concept, enabling them to progressively accept the more expansive possibilities of autonomy. Large-scale training data collection is essential to the development of such technology, and Tesla has positioned itself to handle this challenge with its enormous fleet-wide sensor networks. But there are many obstacles in the way of developing a strong autonomous driving platform, not the least of which is the high expense and difficulty of outfitting cars with the required sensors and cameras. This expenditure, which amounts to hundreds of dollars per car, highlights how aggressive Tesla's strategy is in contrast to other automakers like Ford, whose sensor technology are mostly concentrated on features like parking assistance. Another hotly debated subject has been institutional investment in Tesla. Early investments from funds constrained by their investing mandates were probably hampered by Tesla's delayed admission in the S&P 500 as well as previous credit rating problems. Institutional investors are now reassessing their positions as Tesla's stock seems to set a new baseline, expecting moderate but consistent rises that might surpass inflation. Turning our attention to analyst forecasts, Dan Ives of Wedbush recently raised his price objective for Tesla from $275 to $300, predicting that it will reach $400 in a bull market. As the business stabilizes its price strategy and sees possibilities for large volume growth in regions like China, he believes that Tesla's demand has reached a tipping point, which fuels his optimism. Ives' predictions support the general belief that Tesla's progress toward a yearly production target of 2 million units is not only possible, but probably within reach soon. According to rumored figures from trustworthy Chinese sources, Tesla's Gigafactory Shanghai may be headed for a record quarter, solidifying the company's position as a key force in the EV industry. A major decision to prolong the opportunity to transfer FSD until September 30th in the United States and Australia was announced during a recent shareholder meeting. This decision may have an impact on other markets as well. It is anticipated that this action will increase demand, albeit not to record levels, particularly if interest rates continue to decline. When in the larger financial landscape, making its automobiles more cheap,